we're going to be talking about day trading patterns, and I'm going to go over the patterns that I use. Now you guys know I like to keep things simple, so I don't trade 15 different patterns. I only trade a very few select patterns that I've noticed time after time again will make good moves and are very predictable. So let's get into the first one. And this, yes, I'm on paint. This is the easiest way I could think of how to show chart patterns and draw on them and all that stuff, so forgive me. But this is ARQL, and you can see cup and handle. So where is this cup and handle at? This is the chart. This was in pre-market. These patterns will work in pre-market. They will work during market hours. They will work in after hours. And you can see this is on the 1 minute intraday chart. So where's the pattern? Do you see anything that looks like a pattern? If you don't, that's okay. By the time you're done with this video, you will be able to see the day trading pattern in this video. But where we're looking at is right here. Let's zoom in a bit. So if you look at this, you have this drop down. We have this curl around, okay, and then this move back up. Alright, that is a U. It's a decent little U shape. U's are one of the big patterns we look for. It's one of the major patterns. Like, these happen all the time, and anytime I see a U shape, especially in the case of dropping below the VWAP and going bearish. If you don't know what bearish is, it means that the price is dropping and there's a lot of selling. But you have this going bearish below the VWAP, coming around back up to the VWAP, and once it breaks past the VWAP, you get bullish move, and bullish is the opposite of bearish. Okay, it's a lot of buying, so the stock is hot. So if we zoom out, you can see this was just a little move. The break of this VWAP right here up to here, it's probably a 30-40 cent move. But sometimes these U shapes don't always break out right away. So in this case, you could have bought at the break of this VWAP on this U shape and sold really quickly there, but it didn't quite move as high as it should have. So what we get is we get a little bit more consolidation, and we get this move right here. So it's another little U. So you have the little U, okay? And what's the name of this pattern? The cup and handle pattern. What does this look like? This is a cup, and this is a handle. If you don't like my drawing, well, too bad, because guess what? Bam. Cup, just like coffee cup, and the handle. So that's what you're looking for. You get this big U, and the big U doesn't break all the way. So you get this bit of consolidation where the stock's bouncing around, and then you get this move. And out of this cup and handle, now you can see, now you can see you get this whole move way on up here. Down here from this 850 range all the way up to 950. So it's a dollar move pre-market off of a cup and handle pattern. Alright, so you see how simple that is. You got the drop, the curl around the bottom of the cup, the bottom of the U, comes up, doesn't quite break, so you get this consolidation, and another little U, and then bam, so it looks like a cup and handle. Alright, pretty simple. Okay, whoops, let's see here. Check on some other patterns. Alright, in the CTRV, this was a recent stock, and you can see here kind of in pre-market you kind of get a little U shape. Okay, you kind of get a little U shape here, drop below the VWAP, came around, wasn't a lot of volume, then the break of the VWAP, and you have this big run up. So you got a little U here. A lot of times U shapes will be different sizes, but you usually generally want them to be this kind of spread out, and normally you'd want more volume than this, but if this had a good press release and you noticed it was getting back above that VWAP, that means it's going to go bullish, so you can get these moves. So you have a little small stretched U here, and that's fine. You don't want any U's like this though. Like that's too fast of a drop and too fast of a rise. That's almost a V. So you don't want these, okay? You want a U. So you get this little U here, like I said, drop below the VWAP. We're bearish. We're curling around, making the bottom, and then break above the VWAP, and you have this move. So break of that U above the VWAP. Now, there's a second pattern on this chart here. So if you miss getting in down here, then there was another place you could have got in for a quick profit, and that is right here in this area. We've got this consolidation, but if you don't know what I'm looking at, what this pattern is you're supposed to be looking at, this is called a bull flag. Okay, so you have this straight run up. I'm kind of going crooked here. Okay, and this is the flagpole. Actually, let's undo that. That's ugly. Undo. Okay, so I guess it doesn't matter. It's going to be ugly either way. So you have the straight, this 1, 2, 3, 4, 5 green candles straight up. Okay, and then we start getting this consolidation here. So from the bottom of here across these guys, and then across the tops of here. Okay, now what does that look like to you? You got your pole. This is an ugly pole, but you get the point. This is the pole, and this is a flag. So you have your flag pole with your flag on it, and this is a bull flag. And this is also a triangle. Triangles and U's are really big in the stock market. So you can see the flag is the triangle on this guy. But this is a specific pattern called a bull flag. Now you want this flag to start moving up. Like you see, you have a low right here at the bottom of this candle wick, a little bit higher of a low, a little bit higher of a low, a little bit higher of a low. So the bottom of the flag is moving up, and we want it to move up because that's what we want the stock to do, is move up. If this bottoms of these candles were starting to move down and we were still making a triangle, well, that's more of a bear flag because it's pointing down. So you don't want it pointing down or it's going to go down. You want it pointing up, like this guy here. You see, you get this consolidation, you get the flagpole, get this consolidation, and once you can see this triangle on this flagpole forming your flag, then you want to look for the break of this flag. So you see right here, broke the flag, and you got to move from around 1250 all the way up to 1465. So that's a pretty predictable pattern. Okay, don't save my ugly drawings. Okay, so that was on the intraday chart, on the 1 minute. This is on the yearly chart or 6 month chart, the day chart. Okay, so each candle is a day versus a minute. Now, do you see the patterns here? These patterns work on both charts. Doesn't matter, they work on both charts. So you see, what's your first pattern? And you don't have the VWAP on here, so you're going to use the EMAs as that resistance. Okay, or chart resistance. But anyway, you see we got this U going on here, and it starts to U back up, And so you can see right here is resistance. Stocks got held up here, got held up here, and got held up here. So you've got this resistance at the top of these three candles. But we get this U shape, and then the break of that resistance, that would be like the VWAP on the intraday chart, on the 1 minute chart. Break of this resistance, you get this big move up. So you can see this broke 450, and in 1, 2, 3 days, it was up to 724. So, although I don't use this as much in day trading, you could have day traded this right here at the break, and there was a dollar movement there, 450 to 550. But you can use the swing trade as well. This is what I'm saying. These patterns are simple and easy, and you can apply them to day trading or however you would like. Alright, so you got that U there. So let's look up here. What do we got going on here? You can obviously see this is a clear U, right? Obviously. But it didn't come up and break right here. So instead, what do we have here? We just went over it. Cup and handle, right? So there's the cup. The handle's a little bit bigger, but you have different types of coffee cups in your cabinets. Some of them have big handles, some have really little handles. But as long as this handle is smaller than the actual cup, it doesn't really matter. So as you can see, the break of this $7 right here on this cup and handle pattern, that's where the stock is going to move on up, most likely. So you can see that. And hopefully it does, because I'm in this play for a swing trade. But it most likely it will. It's doing good. It's riding up this 9 EMA, and it's got this cup and handle pattern. Had the U shape back here, broke out, got the cup. Now we're in the handle phase. So break of $7, we should get a nice move on up. Okay. So that was EVFM. Alright. LEDS. So let's look here. This is, of course, this is on the yearly 6-month chart. And you can see right away there's obvious U right here. But you don't really have a lot of resistance on this thing, and this is a big deep U. Remember, you want the more rounded wide bottom U's, kind of like a boat. Maybe I should start calling these boat plays instead of U shapes, then nobody would know what I was talking about. Alright, anyway, so this is a big U, and this is the only resistance you have, and at the break of this resistance you still do get a move from 480 to 557, but then a huge crash. That's why I say you want these more rounded U's like this, because the stock has had time to consolidate and get out shorters and stuff like this. This U is so deep and so big, like after the break of this resistance, it's not going to have much more room to run because it's moved a lot. And as you can see, the EMAs are way down here. So a U-shape way up high on a chart past all the resistance probably won't break out. Remember, we want them to break bullish or bearish. I'm sorry. We would want this to crash down here and come around like this, and then come up and break this resistance for the move. This right here is not a good U-shape. You could have made some profit, but if you were looking for a big move like this type of U-shape, you could get caught up here and then get crashed on. So, like I said, you want these more wide U's and bearish into bullish U's. Now, there is another pattern. Let's clear all this. There's a decent pattern on this. Get rid of my sailboat. if you look here, the bottoms of these candles are going straight up. They're making higher lows, so you got lows, 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 lows. The lows keep getting higher up. Okay, and then you have resistance right along here. Alright, so what do we got here? What's that look like? It's a triangle, right? So once you get to the corner of this triangle, right in this area, and you see it was bearish below the 200-day, so you get this breakout here from 350-ish all the way up to almost $5. So that was a good predictable triangle. Some people call them triangles, some people call them flags, some people call them wedges. Like on the bull flag, that's just a triangle with a pole. So this is just a triangle, and you can call it whatever you want. The fact remains the same. This shape is a triangle, so keep it simple. Call it a triangle. Alright. Now, down here, you're probably looking, since you've learned so much so far about U-shapes and triangles, you're saying, oh, this thing went bearish. Yes, it did. Is that a U-shape going on there? Well, it could be. And it could be that long boat-like U-shape. It looks like it, doesn't it? So, where you would look for the break at, see, the only problem is this is a huge dip, so you're way under there. Like the beginning of this U is like way up here, so it's kind of crazy. But you could ignore that, and you see you get this U here, and your next resistance, major resistance, is going to be at 200 EMA. So if it does break this, you could get a move on up. So there's a lot of patterns on this one chart, but you can see the U shape is clear there. Triangle is clear here. So let's look for at another chart. That was LEDS, right? Yeah. Okay. What are we looking at here? This is an ugly chart, right? We don't like to trade charts with these white little checks. It means there's no volume. These little white dashes. But I was looking for patterns to show you, and this is another one on the 6-month or yearly chart. And you can kind of see here that we're kind of getting a triangle. It's a different shaped triangle. It's going down. Normally this is called a descending triangle. But basically what you have is you have this triangle, and you can see the EMAs are almost making the triangle too. And as the 50 and the 9 EMA get closer and closer together, and they get closer to a point of that triangle, you get a breakout above that. This is called a squeeze, because these two EMAs are squeezing together. They're squeezing the price of the stock together. And usually when it's way down here like this, and then you have your 200 way up here, you usually will get the squeeze probably a couple more days later, right about here, and you'll get the breakout and the move up to there. So I don't search these patterns out, this type of pattern. If I'm looking through my stocks that meet the 4 criteria and I see they have this pattern, I'm going to be very aware that it could go on a really nice move. So this is just called a squeeze pattern. It's pretty basic, but it's the same thing. It's a triangle. I just call it a squeeze because the stock is getting squeezed between the tip of the triangle. But you can make pretty good money on these. So let's see what else we got. MBY. Boy, this was a big one. This was a good one. I think this was Monday, if I remember correctly. Yeah. So this is the 1-minute chart. And you can see you got a little bit of movement right here, but who cares? it drops and goes bearish. Now they had a very good press release, working with Amazon or something like that. So good catalyst meets the criteria, the 4 criteria. So you get this drop bearish, this thing's bearish right along here, and we get this U shape back to the bullish, and right here at the break of this VWAP, once again you get nice move up off of that U. Okay, now you could kind of say this is a very funky looking cup. It's not really a cup and handle, because I mean your bowl's way down here, your U shape is way down here, and this handle is way up here. The stock just moved pretty good, so the consolidation was back here for just a short period, and then it took off. But there were some halts on this, so that can affect the way the chart pattern looks. Okay, but on this U shape, let's undo what we just did. Okay, so we got the U, bearish under the VWAP, coming around, break above the VWAP, we have this move. And right here you can see we also have a bull flag. Okay, so you got the straight up here, straight up movement there, and then we got higher lows forming, and then the flag moving up. So the break of this flag, what do you got? Another big move up. So we actually have a U shape into a bull flag. So that's 2 different entries you could have got in on this stock. And you could say this is just a separate U shape by itself, I guess, instead of saying a cup and handle. So we'll just say it's a separate U shape. It looks like it's more of a V, which I don't. The stock got halted quite a bit, so halts can kind of affect the way the chart looks, because you're not having that fluid movement like you are back here. You're having choppy movement. Okay, but you see U shape, bull flag, we'll say another U shape, and then move on up, way up. So you can see you could have got in right here, and this would have been the best entry. And then you could have got in right here on the bull flag, and you could have got in right here at the break of this U for another move up. But the most predictable, safest place was back here, this U shape going bearish, and then the break of the VWAP for the bullish into the bull flag. So pretty simple, guys. Like I said, just keep things simple. No need to overcomplicate it. Things are already complicated enough. So far what we've learned. Can you spot the pattern in this play? Okay, so let's take a look. So first thing you see, and this is another choppy play in the beginning, but it opens up, hits the VWAP, gets held up here, comes back down below the VWAP, comes around, and then break above the VWAP. What is that? Another U shape, right? Okay. So then we have this move up by right here at the break of the VWAP. You get this move up. It's a nice move. Now we know our bull flags. Remember, there's also a bear flag. You can see this is the flagpole, but it's heading down, and it's not quite. Like you can see, this part's kind of going up, but the tops are going down. So the flag is more pointing down than it is up, so you get this crash. So that's your bear flag, not your bull flag. Okay, so I'm going to clear that one off because I don't want anybody to get confused. But we get this drop down below the VWAP, come back above the VWAP, and what? Another U shape. So we got the U shape there. Now you could also say, sometimes this happens, you have a flagpole, and the top's there, bottom's here, so the triangle flagpole, it's kind of another bull flag. And then you get this big move up. So you got, just looking right there. How am I? There we go. Okay. You can see we do have several patterns in this play. It's a very interesting play. But you have this U shape here. You have this bull flag here. But if you look at the big picture and you start up here, you go around and up, what do we have? Another big U shape here. Okay? I'll clear all this off so you can see what I mean, so you're not confused by the other drawings. Another big U shape with resistance here, breaks through, and it moves on up. So you can see there was 3 different patterns in that one stock, and you don't want to start making up patterns. But this is a big U shape, and it is above the VWAP here. That's why I said this first one, when this thing started going bearish, and it was bearish below the VWAP, get the break above the VWAP on this little U here. Now, that's why I say don't overcomplicate things, because you could do the flag, you could do the big U, you could do all that. But where's a better entry? Not up here at the break of this big U. It's predictable, but you're not going to make quite as much profit if you do it down here at the break of the VWAP. Like, look how much room there is from here to there for this resistance. That's quite a big gap there, and so your entry here is nice and safe, and you can just sell up here. Whereas if you get in up here, you're way off the VWAP. This thing could potentially crash down. So keep it simple. Use the U shape on the VWAP. That's the best one. It's going to get you into the stock the safest. Alright, so you can look here. There's really not many other patterns. I mean, there's another little U shape here. The break of that, you can see you got to move from like 240 to 249, but I wouldn't play that. I mean, the stock is way up at this point. So back here at this first little U with the break of the VWAP, that's the best entry for sure. But if you miss this, you just wait and wait till it drops down the VWAP and get this little U shape back above the VWAP. Safe entries. So the best places to buy, number one would be down here at this first U break, and then at the second U break of the VWAP. So VWAP's important. You can really get some good entries by looking for the breaks at the VWAP after you've had a pullback on these plays. So one more pattern I'll go over, and it's the same pattern. Like I said, I like to keep things simple. So what do we got here again? Oh, is it the same one? Oh, it's the same one. Okay, maybe I've already went over that one. Yeah. Alright, so yeah, that's all the patterns. U-shapes, triangles. Those are the easiest things to look for. So that's what I look for in my arsenal, the U-shapes and triangles. Okay, keep it simple. Now, there is one other pattern. I couldn't find one because I only usually use them during earnings season. Okay, and I can't really show you a chart of it, but I can do a drawing of it. Oh no, not a drawing. It's going to be terrible, I know. So let's do this. So say this is the stock. It's moving up here, a little rip there, and then it's earnings seasons, and the stock comes out with bad earnings. So in the morning, so then you have this big gap down. Okay, so the stock opens up way down here. So you don't have the big crash candle. You just have a big gap down because it opened up red. Okay. Well, if this is a good company, or people believe in this company, just because it had bad earnings doesn't mean that the company is a bad company. But you get people who panic sell, and that's why you get this move down here. They're scared. They're like, I've got to get out of this play. They had bad earnings. It's the end of the world. You know, all that type of stuff. So when they do that, it crashes the stock. But the people who still believe in this stock are going to see this and say, well, this is discount prices. This is the dollar bin at Target or whatever. This is, you know, the super cheap prices. We're gonna stock up here, and they start buying this stock, and it ends up getting a bounce back up. Okay. Now this is called a dead cat bounce. Okay. I don't know exactly why it's called that. I guess somebody saw this pattern and was like, hey, this looks like if you threw your cat off a cliff here and it hit the ground and then it bounced. I don't know. That's the only thing I can guess. I did not make this up. This is just an actual thing. It's a dead cat bounce, but they can be very profitable. And normally, like I said, I only look for these during earnings season. They're very, very predictable in earnings season. The rest of the time, sometimes they work, but that's not. Like I said, I usually don't play them that much unless it's earnings season. So, just because the bad earnings is like not that big a deal for most companies. But yeah, that's it. The dead cat bounce. So that's it for the patterns. You guys should be pretty strong at finding patterns. If you're not, you can always go into your Thinkorswim and just start pulling up random stocks and see if you can find patterns that are leading to breakouts. Just find the U-shapes and triangles. That's all you need to look for. If you find them and they're making sense, that they're going bearish under the VWAP, coming around and breaking above the VWAP, then you've pretty much got it down. So practice always helps. So practice looking for patterns. Alright guys, if you haven't, hit that like button and subscribe, and I will see you next time.